Welcome back, folks. This is a live trade case study. The trade's closed out and I've recorded the entry live, and now I am narrating over the trade to give you some insight into my entry. So this is a trade where I have identified it to be a market maker buy model. Okay, a market maker buy model is simply going from one PD array, okay, maybe a premium PD array, as in this case, down to another PD array, in this case down to a discount PD array. It could also be the other way around. Okay, so from here we've gone to a premium PD array down to a discount PD array, which is a live of the week. Okay, now back up to a premium PD array. That's all a market maker model is. Okay, now I can see liquidity above, okay, which is going to be my target. You can see that is the original consolidation. Okay, now I can see as we've come into the low of Friday, also the low of the previous week, okay, and into the midpoint of a daily bullish order block. So you'll find, go back and look on the chart, on the daily chart, there is a down candle that we've come into, okay, which is a daily bullish order block. And this yellow line represents the midpoint of that daily bullish order block, from where you can see the market has kind of rejected, okay, I call it rejected, but really it's found support at that level, okay. And you may not see that on this chart, but as I have traded for so long, I'm experienced and have trained my eyes to identify when the market is finding support at a key PD array. In this case, we've taken liquidity, okay, at a daily level, also a previous weekly low, okay, and we have tapped into the midpoint of a daily bullish order block, okay, from where I can see we are supporting. So I've taken a long position, an 8-lot long position, okay, so relative size. I typically trade 3-5 lots, okay, so still relative size, okay, basically just a bit more than half of what I normally trade, okay. And now you can see there's been a dump down, right? This is the dump for the pump. I did a trade earlier today, which was the short from that high, okay, and that was down to Friday's low. Now I have recognized that we have found support, which is exactly what I said in a previous video, that I would assess the market once liquidity, the Friday lows or the previous weekly lows would be taken, to see if the market wanted to continue lower or potentially retrace back up. And that's what I've identified here, looking at the price action as we've come down into the low of Friday, into the low of the previous week, okay, into the midpoint of the bullish daily order block, and seeing how this has dumped down, okay. Now I'm seeing its support, okay. So I just wanted to talk through the entry, but once I start to move, you'll kind of start to see the market maker model, okay. You can see we have the original consolidation, okay, then we have another level of distribution, okay, and then we have a smart money reversal. Now you won't see that, you may not see that, I see that because I trained my eyes, okay. The way to identify this is to start to see consolidation after the market has taken a key level, in this case previous daily low being Friday's daily low, okay, previous weekly low, right, and coming into a bullish daily order block. So we've basically tapped into there and we're starting to see consolidation, okay. Also the way this has come down, I know that this is a dump for the pump, okay. My target's back up to those equal highs, okay. The other point to note here is when the market took out that liquidity above prior to coming down to take out Friday's low, from where I shorted on an earlier trade, that was a very shallow run into those equal highs, okay. That's another indication that we are going to go back up there, okay. And so this to me is just the dump for the pump in simple terms, but in ICT terms, this is essentially a market maker buy model, okay, where we have the original consolidation at the top there, where we've taken that liquidity, okay, and then we've had a level of distribution, okay. We can see there's a bit of consolidation at where I've drawn that fair value gap, okay, from the left hand side. Then we've had another level of distribution, which we can call redistribution, okay, the second level of consolidation there. And then we've had a smart money reversal, okay, and that's essentially the market maker buy model, okay. So that's what I wanted to say in this recording, okay, and I've journaled the trade, okay. So this is something that only comes with practice and experience and training your eye to identify these market maker models, where the left-hand side of the curve is the manipulation, okay, where they are, in this case, selling to retail traders, and at some point down the bottom, when it reaches the level it needs to go to, such as a discount PD rate, in this case, because we are going down first, there will be a smart money reversal, at which point there is an opportunity for institutions and large funded traders to get in on that move, okay, for the move up, back up to liquidity that resides above, and that is ultimately back up to the original consolidation, okay. So you've got to go back, first look at the markup that I've done on my Twitter profile at Forex Recipes, okay, print that out, Then go back and look at this on your own charts and identify what I've marked out on my post there, because this is a repeat pattern, right? It's a repeating pattern, and you've got to get good at identifying this in real time. Okay, it's a very common pattern where there is that initial manipulation followed by the real move, which will be on that right side of the curve that you'll see in my post. Okay, so I'm just going to speed up the video. It took a few hours to get to where it needed to go, back up to those highs, but you can see the output, the outcome, the end result in my Twitter profile where I've journaled this trade once I have closed it out. Okay, hope this becomes a good lesson for you. I will now talk with you in a future video.